Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short. Knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and analyze the markets and go into the weekend session, which there really isn't a weekend session, but we're just going to go into the weekend talking about what happened this past week. First of all, the dollar index did have a substantial bounce midway at around 8 a.m. on the Friday session. We kind of bounced up a little bit. We went up to around $78.04. You look at the 5-day chart, and you do notice that the dollar index did have a pretty nice week so far, except on the Friday session. Now, what this typically happens when there are a lot of bulls in the market, a lot of people like to sell out of their positions right into the Friday. So again, this is just typical market behavior. We really don't have a typical resistance area to work off of based on how it pulled back, except for the 78.50. Again, we're still in a longer term uptrend, so I do anticipate much more strength in the dollar index in light of what's going on in the European zone. Okay, moving on, the Dow Jones Industrial Average has basically traded at around 11,796. It had a small bounce into the Friday session. Thursday was a pretty weak day on the session overall. We did have a major pullback by around 1.5% or to around 2%. We lost around 200 points on the Dow Jones Industrial Average, 2 to 300 points in fact. So again, pretty weak day for the Wednesday and Thursday session, and on Friday we got a nice little bounce on the short cover rally. So again, not too much here. I do anticipate a much longer term downtrend, but again, I covered my position into the weekend along with many other trader friends of mine, along with the broader markets as a whole. So again, we're still in a downwards trend. We do have some support around this 11,700 area, but it's not much. I don't anticipate significant support until we get around, I believe, around 11,400 with that, no, 11,500 with that, I believe, the 50-day moving average. So again, keep in mind the 50-day moving average level, and for now we're going to continue this downwards trend until something significant happens out of the European zone, where they reassure bond investors that they're going to get a yield and they're going to get paid back regardless of whatever happens over the short term. So until we get that out of Europe, we're not going to see much movement to the upside for the stock market, and therefore bonds in the Eurozone will continue to sell as investors divest out of Europe and continue to put their money towards the Japanese yen. The Euro-Japanese yen pair will continue to sell as euros will be converted into the Japanese yen. People will continue to sell out of their European positions. They're going to keep selling their European stocks. Stock investors will continue to sell their stocks as, again, the whole entire underlying fundamentals don't look too good for the Eurozone. Moving on, the European Japanese yen did have a small bounce. Again, this typically happens after a really bad week. The main reason is because, again, a lot of people like to cover their positions after making a pretty substantial amount of profit. So again, don't be too surprised by that. Again, pretty weak, pretty weak for the European Japanese yen pair. I anticipate much more downside to come for the European Japanese yen, as again, a lot of these European banks, especially the Bank of Ireland, the Bank of Scotland, the Bank of Grecian banks, Spanish banks. Basically banks in the Eurozone are basically divesting outside of the euros and trying to invest into stuff that will make them a yield without risking much of their client money, which basically means all the money that's deposited into these European banks aren't being used on the European economy as a whole. They're just being transferred into the Japanese yen, and of course they're just using that to buy Japanese treasury bonds, or they're converting it into the US dollar and they're buying US treasury bonds. So again, it's not too good for the European zone, as again, a lot of the money that these depositors are putting into banks isn't really being invested domestically. Okay, moving on, the silver market has had a nice little bounce again. This is typical market behavior, especially on a Friday after having so many people getting flushed out on their short positions. Again, people always like to cover into the weekend, especially when they've been short the whole week. Same thing kind of happened for gold, except gold did have a kind of a hard time getting a bid in this market. It kind of settled for like a falling star. So again, I wouldn't be too surprised on Monday or Tuesday to see a continuation of a bounce to the upside and perhaps resistance at the 20-day moving average, where eventually we start pulling back again on the gold chart. Again, the main reason why gold isn't being bid up is because there's still safe havens in the world. One of my friends or subscribers on my YouTube basically pointed out the fact that for as long as there's a good safe haven to invest into, pretty much things for gold typically has a hard time getting a bid. When the treasury market in the U.S. was questioned, gold had an easier time getting up to that 1900 level, but for right now, since all these European banks are bailing out of their European bonds, they still have places to put it, like the U.S. Treasury market and the Japanese Treasury market. And we still have a pretty high credit rating here in the U.S. and in Japan. So again, overall, I still think that gold still has some more room to the upside. We just need to get some confirmation out of the European Central Bank to go ahead and issue a bigger bond repurchase program. But until that happens, again, I'm relatively negative on gold. So overall, I'm kind of neutral to upside, but still, it's going to be a hard bargain to try and buy gold right now. I do anticipate some decent support at around the 200 to 100-day moving, or 200 to 50-day moving average. And basically, that does it for me for today, guys. If you guys have any questions, be sure to go ahead and leave a comment below my wall, and I'll try to get to it as soon as I possibly can. Take